The price of this stock was 36 rupees in April 2021 and it touched 3,140 rupees in the next 9 months. 1 lakh rupees invested would have become 87 lakhs in the first 9 months of the stock's public trading. But since then, the stock has been constantly correcting and has crashed below 400 rupees, massively destroying investors' wealth. If you are a retail investor trapped in this stock at higher levels or considering to buy this stock at lower levels for future multi-bagger returns, please keep watching this video till the end. Because in this video, we are going to directly look into the company's annual reports and the auditor's concerns to find the real reasons behind the crash. So first, let's try to understand what business does the company do or claims to do. The company claims to be in the business of carbon-free, clean and green energy. After all, that is the future of this planet. So are they producing electric vehicles? Green hydrogen? What about lithium-ion batteries? Must be solar power. The annual report says that the company is in the business of offering best-in-class consultancy and advisory services for carbon asset management to companies across the world. The company's premium product or service is a thing called carbon credit. So how does the company price a carbon credit? The company decides the value of a carbon credit based on the cost of implementation of a project or the value that a project delivers. Did you understand anything from that, what business the company is doing? I certainly did not. If a 10-year-old child asks me what business does Hindustan Unilever do, I can easily explain that the company sells Lifebuoy, Sunsilk, Rexona, Pepsodent, Surf Excel. There is a thing called carbon market where these carbon credits are sold. The annual report at page 25 says that India does not have a carbon market. That's right. The managing director of the company starts the annual report with a quote that the future belongs to those who believe in the beauty of their dreams. Maybe EKI Energy is in the business of selling dreams. So what is the main reason behind this massive crash? Well, it's a report by the auditor named Walker Chandiok and Company. The auditor has raised the following concerns. Material weaknesses in the company's financial controls, inaccurate and incomplete financial statements, which basically means accounting fraud, falsely stating certain expenses as assets, fears of continuing as a going concern, which means the auditor has fears that the company might shut down. If any company goes through a tough period of low sales and low profit, the stock usually corrects. But in the future, when sales and profit improves, the stock recovers. Because a temporary problem in the profit and loss statement usually does not damage the long-term prospects. But whenever there are issues with the balance sheet of a company which contains the assets and liabilities, many companies shut down and stocks go to zero. A company showing false assets in the balance sheet is a major red flag. Many people are saying that the fundamentals of EKI Energy are strong. The company has a return on capital employed, that is ROCE, of 236%. A 236% return on capital may be possible in a monopolistic economy, but not in a free market capitalist economy. That's because there are so many venture capitalists and big investors ready with huge capitals to fund n number of companies in a sector which can generate such returns. As a result, there may be 10 companies with 23.6% ROCE instead of just one company with 236% ROCE. That is the nature of capitalism. And obviously, there are no entry barriers in the industry of carbon credits. Now let's have a look at the shareholding pattern and the chart. So when it comes to institutional holding, there is only one FII and one DII invested in the stock. Even they have massively reduced their holdings. It could be just profit booking because they have not sold their entire holdings. That may be a positive thing. Public shareholding has increased a lot. The same thing happened with the Yes Bank stock when it crashed. And the Yes Bank stock, after so many years, has still not recovered to its previous high. So retail investors must keep that in mind before making any decision about the stock. So here is the chart of the stock. If you look at those massive green volumes at the beginning, it's quite clear that the stock's price was pumped up and it looks like all those buyers have already sold out. Those initial buyers have definitely made huge profits, but the future of the stock does not look that good to me. The company's tagline is steering the planet to net zero, but it looks like they are steering retail investors' investments towards net zero. Please type in the comment section what are your views on EKI Energy. Do you think it is going to become a multi-bagger from this price, or do you think it is going to zero? Thank you for watching the video and have a nice time.